Do you think having more money will make you more disciplined? Or with a larger account, you'll be able to endure losses and handle losing streaks without hesitation? But let's rethink this. If you can't manage a small account well, can you truly handle it when that number grows 10 or even 100 times larger? Money doesn't make you more disciplined. It simply amplifies how you handle risk, emotions, and the temptations of the market. This is why professional traders and fund managers rely not just on their capital, but on unshakable discipline, a clear system, and a sound mindset. These are the keys that help them navigate the toughest challenges in the market. Today, we want to explore this truth with you. How to manage your account and think like a professional, no matter how much capital you're working with. If this is your first time visiting our YouTube channel, welcome. Our channel is dedicated to delivering valuable content on financial topics such as Forex, cryptocurrency, and personal financial management, aiming to help you protect and grow your income. Don't forget to like, share, and subscribe to our channel so you never miss a useful video. Together, we'll bring you closer to financial freedom and professional trading strategies. 1. Timeframes. The secret to success lies in the bigger picture. I believe most people who turn to Forex share a common dream: achieving financial freedom, spending more time with their families, and escaping the pressures of traditional jobs. They dream of a future where they can sit at home, glance at their trading screens, and still feel close and connected to their loved ones. But here's my question to you. Why wait until you succeed to start living the life you dream of? Success in Forex doesn't come overnight. The path to it requires discipline, perseverance, and a well-thought-out strategy. However, you can start building the life you want right now, even if you haven't made millions from the market yet. This starts by changing how you approach trading and the time you dedicate to it. Instead of getting caught up in smaller time frames, where you're glued to the screen all day, switch to trading on higher time frames, like the 4-hour chart or the daily chart. By doing so, you'll not only have more time to analyze the market effectively, but also gain precious time for what truly matters: playing with your children, sharing dinner with your family, or simply taking a moment to rest and maintain your health. Of course, I'm not saying that trading on higher time frames is an easy road. You'll need to learn to accept larger stop losses and cultivate the patience to wait for genuinely worthwhile opportunities. But in return, you'll avoid rushed mistakes, reduce psychological pressure, and most importantly, achieve peace of mind, something smaller time frames can never offer. Imagine this. Instead of stressing for hours at a time, you only need to check your charts once or twice a day to see if a suitable signal is forming. Your decisions will become calmer and more calculated because you're no longer obsessed with every minor price fluctuation. And even if the market doesn't provide any opportunities that day, you can simply turn off your computer and live your life without feeling like you've missed out. Remember, the dream of a free life isn't just about the financial results Forex can bring, but about how you build and enjoy the journey. Success is not a destination. It's how you live each day on the path you've chosen. So, start living the way you want right now. Spend time with your family, develop trading discipline, and leverage higher time frames to achieve the balance you truly desire. The market will always be there, but the moments with your loved ones won't wait. 2. Trading frequency. Less, but better. Most new traders entering the market believe that the more they trade, the more opportunities they have to make money. However, this is one of the biggest misconceptions, and also one of the most dangerous, in Forex. The truth is, the more you trade, the more likely you are to make mistakes. And mistakes in the Forex market aren't just lessons. They can come with a very high price. If you ask me what sets an average trader apart from a successful one, the answer isn't the number of trades they make, but the quality of each trade. Traders who trade less but focus on high probability setups always stand a better chance of achieving consistent and sustainable profits. Why? Because they don't let themselves get swept into the market without a clear reason. Every trade they take is carefully calculated, from the entry point, stop-loss level, to the profit target, all based on a specific plan. If I were in your position, here's what I would do. I'd spend most of my time observing and waiting. The Forex market is full of opportunities. What's often missing is a trader's patience. When you learn to trade less, you'll have more time to analyze thoroughly, understand trends better, and select trades that truly matter. This doesn't just help you avoid unnecessary mistakes, but also reduces stress and psychological pressure, factors that often lead to rushed decisions. Trading is not a fast win game. It's a long-term journey that requires careful calculation. Limiting the number of trades you take is not about being passive or missing out on opportunities. It's a way to protect your capital and enhance your trading performance. Remember, the market will always present opportunities, but your capital is not unlimited. Therefore, take the time to seek out the best opportunities and only act when all conditions are aligned. Just like a lion hunting prey, it doesn't chase after every animal that crosses its path. It waits, observes, and only strikes when the opportunity is truly perfect. As a trader, you must do the same. Trade less, but make each trade count. This isn't just a strategy for survival in the market, but a way to grow sustainably in the long run. So next time you feel the urge to hit the trade button, ask yourself, is this trade really worth it? Or am I trading just because I don't want to miss out on something? If you learn to answer these questions honestly, you'll begin to see a significant difference in your trading journey. 3. Precision trading. Waiting for the perfect strike. There's a truth that not everyone realizes. Success in trading doesn't depend on how often you trade, but whether you act at the right time. Think of a lion hunting its prey. It doesn't waste energy chasing targets that are too strong or opportunities that aren't ripe. Instead, it waits patiently, observes carefully, and only strikes when the moment is truly perfect. If you want to trade like a professional, the first thing you need to do is clearly identify your edge in the market. That edge could be a candlestick pattern, a strong trend, or a reliable support-resistance level. Once you've pinpointed your edge, you need a specific plan to capitalize on it. Every trade you take should be executed not based on gut feelings, but on a clear set of conditions you've outlined in advance. I often spend most of my time preparing rather than rushing into trades. Preparation isn't just about technical analysis or watching the market. It's about building a clear trading plan and practicing it until it becomes second nature. This plan should include when to enter a trade, when to exit, the level of risk you're willing to accept, and the specific conditions that must be met for a trade to be executed. The most important aspect of precision trading is discipline. Discipline to wait for signals that meet all your criteria. Discipline to avoid getting caught up in market movements you don't fully understand. And discipline to stick to your plan, even when you feel the urge to act impulsively. Remember, the best traders aren't the ones who trade the most. They're the ones who know how to sit still and patiently wait for truly worthwhile opportunities. A single perfect trade with high probability and significant profit potential is always better than dozens of trades made just to feel busy. So the next time you feel the urge to hit the trade button, ask yourself, is this the opportunity I've been patiently waiting for, or just an emotional reaction? If the answer isn't clear, step back, observe, and wait for the truly right moment. Only when you learn to trade with precision and confidence will you move closer to success in the Forex market. 4. Market movements. Hunting big, not chasing small waves. Think of a crocodile hunting its prey. It doesn't waste energy snapping at every small fish that swims by. Instead, it waits patiently, lying still, until a herd of wildebeests crosses the river. Then it strikes at the perfect moment, bringing home a large feast. Trading Forex is much the same. If you want to succeed, you must learn to patiently wait for the big opportunities, the significant market movements, rather than wasting time and energy on small, insignificant fluctuations. The random daily fluctuations in the market can be tempting, but they are also where most traders lose money. Why? Because these small moves often cause confusion, distract you, and are usually not strong enough to generate sustainable profits. Instead of chasing after small opportunities, you should focus on identifying perfect storm setups, points where all key factors align to create powerful, reliable, and long-term market moves. If I were in your position, I would change my perspective on trading. Instead of trying to win quickly with trades every day, I would focus on capturing significant market movements. These moves can take days or even weeks to form, but they have the potential to deliver much greater profits compared to repeatedly jumping in and out of the market. This approach requires patience, a lot of patience. You will need to wait, not just for hours, but possibly for days, until your signals meet all your criteria. But remember, one large, well-planned trade can compensate for numerous small, ineffective ones. Additionally, holding trades for longer durations helps reduce transaction costs and the psychological stress of constantly entering and exiting the market. Focus on analyzing higher time frames, such as daily or weekly charts. Look for major trends, key price levels, and wait for trading signals at critical decision points. Once you've entered a trade, trust your analysis and let the market do its work. Avoid the temptation to exit a trade too early because of minor fluctuations. Instead, keep your eyes on the bigger picture and let the market work in your favor. The market always offers significant opportunities for those who are patient enough to wait and wise enough to seize them. Remember, you don't need to win every small battle to win the war. Just a few well-timed large trades can put you far ahead on your journey to mastering Forex. 5. Strategies. Simplicity is the ultimate sophistication. When I first entered the world of trading, like many others, I was captivated by complexity. Countless technical indicators, multi-layered trading systems, and tools that seemed almost magical appeared to be the keys to unlocking the mysteries of the market. But the more losing trades I experienced, the more I realized a harsh truth. Complexity doesn't equal effectiveness. The most successful traders I've encountered all share a common philosophy: keep it simple. Instead of relying on dozens of indicators, they focus on what truly matters: price action, market trends, and key price levels. These are the fundamental building blocks of all market movements. If you ask me what makes a good strategy, my answer is simple: clarity and practical application. A complex strategy filled with convoluted rules won't help if you don't fully understand it or can't stick to it during high-pressure moments. A simple, clear, and effective strategy, on the other hand, gives you the confidence to trade with discipline and decisiveness. If I were in your position, here's what I'd do. I'd set aside those overly complex trading systems and return to the core values of the market. I'd observe price action on higher time frames to identify major trends. Then, I'd mark significant support and resistance levels, areas where the market tends to react strongly. Finally, I'd wait for price action signals at these levels, such as reversal candlestick patterns or clear breakouts. The beauty of this approach is that you don't need to predict the future or chase after market news. The market always prices in news ahead of time. Price movements reflect the expectations and concerns of investors long before news is released. So instead of being distracted by what's happening, you can focus solely on how the market reacts. Remember, a simple strategy doesn't mean it's ineffective. On the contrary, simplicity eliminates noise, allowing you to focus on what truly matters and giving you a clear edge. Most importantly, simplicity helps you trade with confidence, discipline, and consistency, the most crucial elements for success in the Forex market. So ask yourself, is my strategy truly effective, or am I complicating it just to feel busy? Sometimes, returning to the basics can be the biggest step forward you can take. Thank you for joining me on this journey to explore the essentials of trading success. Remember, simplicity, patience, and discipline are the cornerstones of mastering the Forex market. It's not about how many trades you make or how complex your strategy is. It's about focusing on what truly matters and building your confidence step by step. If you found value in this video, don't forget to like, share, and subscribe to the channel so we can continue learning and growing together. The market will always be there, but the time to take control of your trading and your future is now. See you in the next video.